All right, look, I've been watching XRP for years, and I mean really watching it. Not just the price action, not just the hype cycles. I'm talking about what's actually happening behind the scenes. And something fundamentally different is happening in 2026 that hasn't happened in any previous cycle. XRP utility is finally catching up to the narrative. And when I say catching up, I mean we're seeing real-world adoption at a scale that most people don't even realize yet. Because while everyone's focused on the price chart, institutions are quietly building the infrastructure that's going to power global payments for the next decade. And XRP sits right at the center of it all. So let me break this down piece by piece, because there's a lot of noise out there. A lot of people talking about 300 banks using RippleNet, but XRP not moving. A lot of skepticism about whether real adoption is even happening. And I get it. I understand the frustration. But if you actually dig into the data, if you look at what's happening with on-demand liquidity, with RLUSD, with central bank digital currencies, with institutional infrastructure, you start to see a completely different picture. You start to see why this cycle is fundamentally different from every cycle that came before it. Let's start with the elephant in the room. RippleNet has over 300 financial institutions. That's a fact. Banks, payment providers, remittance companies, all using Ripple's technology. But here's where it gets interesting, and this is the part that most people miss. About 40% of those institutions are now actively using XRP for on-demand liquidity. Not just the messaging layer, not just the tracking tools, actual XRP moving across borders in real time to settle payments. That's 120 institutions using XRP in production. Not testing, not piloting, live production use. And that number's growing. Now let's talk numbers, because numbers don't lie. Ripple's on-demand liquidity network processed over $15 billion in cross-border payments in 2024, and that's a 32% year-over-year increase. But here's what's wild. In Q2 2025 alone, ODL processed $1.3 billion, and the growth is accelerating. Asia-Pacific accounts for 56% of that volume. Tranglo in Malaysia operates more than 20 corridors. SBI Remit in Japan is supporting RLUSD-based remittances. Travelex Bank in Brazil has live ODL usage. Santander's running corridors from Portugal to Brazil. Intermex is strengthening US to Mexico remittances. This isn't speculation. This is money actually moving through the XRP ledger right now. And you want to know what that means? It means XRP is unlocking $27 trillion in dormant liquidity globally. Because here's how traditional banking works. Banks have to keep massive amounts of capital locked up in Nostro and Vostro accounts. Pre-funded accounts sitting in different countries just waiting to maybe be used for a payment. That capital's just sitting there, doing nothing, earning nothing, creating massive inefficiency. ODL eliminates that. Banks convert fiat to XRP, transfer it across the XRP ledger in 3 to 5 seconds, convert it back to local currency on the other side. No pre-funding required. Capital efficiency goes through the roof. And for banks, capital efficiency is everything. Now, before we go any further, I want to pause for a second. Because if you're watching this and you're thinking, okay, this utility story is compelling, but I don't actually know how to position for this, how to read on-chain data, how to identify when institutions are accumulating versus when they're distributing, then you need to check out our crypto course. Because understanding utility is one thing. Knowing how to actually trade around institutional adoption cycles is completely different. The course breaks down exactly how to read ODL volume, how to track RLUSD deployment, how to identify whale accumulation patterns, how to set your entries and exits based on real adoption metrics instead of just price action. Links in the description. Get access while we're still in the building phase. All right, now let's get back to why this cycle is different. Let's talk about RLUSD, because this is massive and most people are sleeping on it. Ripple's stablecoin just crossed $1.33 billion in market cap. And it's not just sitting there, it's being actively used. On January 12, 2026, Ripple confirmed that RLUSD is now being used as collateral by leading financial institutions, including BlackRock. Read that again. BlackRock is using RLUSD as collateral. That's not a pilot. That's not a test. That's institutional adoption at the highest level. When a digital asset is accepted as collateral, it becomes part of the foundational plumbing of financial markets. It means institutions trust it to hold stable value, meet compliance requirements, and function reliably in risk-managed environments. And here's where it gets really interesting. RLUSD just got listed on Binance, the world's largest crypto exchange by volume. Trading pairs include RLUSD/USDT and XRP/RLUSD. Ripple CEO Brad Garlinghouse called it extremely positive. And he's right, because Binance's global reach, deep liquidity, and institutional credibility are exactly what RLUSD needs to scale. And guess what? When institutions want to move money across borders using RLUSD, they often need XRP for liquidity on the XRP ledger. So as RLUSD adoption grows, so does the utility and demand for XRP. This creates a positive feedback loop that most people aren't even thinking about yet. Now let's talk about Japan, because Japan's shaping up to be Ripple's most important market heading into 2026. SBI Holdings is launching RLUSD in Japan in Q1, and this isn't some small pilot. This is targeting Asian payment corridors where remittance volumes are highest. Japanese and South Korean regulatory frameworks explicitly support RLUSD pilot integrations. And when you combine that with Japan's existing financial infrastructure, with SBI's massive network, with the regulatory clarity that's already in place, you're looking at potentially billions of dollars flowing through RLUSD and XRP rails in one of the world's largest economies. But wait, there's more, because Bhutan just went live with something that's absolutely wild, and nobody's talking about it. Bhutan is using Ripple's CBDC private ledger to power their central bank digital currency, the digital Ngultram. And this isn't a pilot, this is live. As of January 2026, they launched new physical banknotes alongside a programmable digital version of the same currency. Identity-backed, compliant by design, built for cross-border payments. They're layering it with digital identity systems, QR-based retail payments, Binance Pay, Lightning addresses, the whole stack. And India's UPI system already works in Bhutan, so Ripple's CBDC layer is syncing up with regional payment rails. XRP plays the role of a neutral liquidity bridge. This is what real sovereign digital transformation looks like, and most people will never even know they're interacting with it. Now let's talk about what's different about this cycle from a regulatory perspective. Because the SEC settlement in August 2025 changed everything, Ripple settled for $125 million. And that settlement confirmed that XRP is not a security in public market transactions. That regulatory clarity removed the biggest barrier to institutional investment. It enabled the launch of spot XRP ETFs in November 2025. And those ETFs? They've absorbed $1.3 billion in just 50 days. 43 consecutive days of positive inflows, 0 outflows. That's the second fastest crypto ETF to cross the billion-dollar threshold after Bitcoin. And here's what people need to understand about ETFs. When institutions buy through ETFs, they're not buying on exchanges. They're buying through OTC desks, over the counter, which means those tokens are getting pulled from available supply without showing up as exchange volume. So while retail's looking at charts thinking volume's low, institutions are quietly absorbing hundreds of millions of dollars worth of XRP in the background. And those tokens aren't coming back. They're locked in custody. They're off the table. And when you combine that with exchange balances dropping 45% in 60 days, from 3.95 billion to 2.6 billion XRP, you start to see the supply-side picture. Supply's getting tight while demand's increasing. That's a recipe for explosive moves when the catalyst hits. Now let's talk about the federal bank charter, because this is huge. Ripple received conditional approval from the Office of the Comptroller of the Currency for a national trust bank charter in December 2025. This allows Ripple to operate as a federally regulated fiduciary. It gives them direct access to the Federal Reserve's payment systems. It positions them to offer custody and settlement services under regulatory oversight. Think about what that means. Ripple's not just a crypto company anymore. They're becoming a federally supervised financial institution. That's the level of legitimacy and infrastructure that traditional banks require before they go all in on any technology. And speaking of infrastructure, Ripple President Monica Long just outlined their 2026 roadmap, and it's all about deepening infrastructure, accelerating enterprise adoption, tighter integration across the digital asset stack. They're building what she calls full-stack crypto infrastructure, blockchain rails, stablecoins, custody services, all integrated. Recent acquisitions like Palisade strengthen their multi-party computation custody capabilities. They're investing heavily in RLUSD. They're focused on institutional-grade payment and settlement tools. And they raised $500 million at a $40 billion valuation to scale all of this. That's not hype. That's capital being deployed to build real infrastructure. Now let's address the elephant in the room that skeptics love to bring up. They say, yeah, but 300 banks are using RippleNet, and on-chain volume isn't exploding. What gives? And it's a fair question. Here's the answer. In corridors where ODL runs, XRP moves through the system for only a few seconds before converting to destination currency. That creates efficiency but not sustained on-chain volume the way you'd see with speculative trading. But that's actually the point. XRP is not designed to sit on-chain for long periods. It's designed to be a bridge, a few seconds of utility per transaction. But when you're processing billions of dollars in payments, those few seconds add up to massive liquidity provision. And institutional adoption moves slowly by design. Banks test small corridors. They clear compliance steps. They scale only after months of review. So even with Ripple reporting trillions in ODL throughput, actual daily on-chain volume stays modest compared to what it could be once full deployment happens. We're still in the early stages. The infrastructure is being built, the rails are being laid, the regulatory clarity is coming together. And when all of that's in place, when banks feel comfortable deploying at scale, that's when you see the volume explosion. Let me give you some context on what's possible. Standard Chartered projects XRP could hit $8 by 2026, and their thesis is based on ODL capturing 14% of SWIFT's $150 trillion in annual transaction volume. Let that sink in. SWIFT processes $150 trillion per year. If XRP captures even a fraction of that, we're talking about liquidity demands that dwarf current market conditions. And with regulatory clarity improving, with RLUSD creating new use cases, with ETFs providing institutional access, that thesis is looking more realistic every day. Now let's talk about what makes this cycle different from a technology perspective. The XRP ledger has processed over 4 billion transactions. Settlement times are 3 to 5 seconds. Fees are measured in cents. That makes it a compelling alternative to traditional systems that take days and cost significantly more. And it's not just payments. The Dubai Land Department is tokenizing real estate on the XRP ledger. Ondo Finance is bringing tokenized U.S. Treasuries to XRPL via RLUSD redemption mechanisms. Real-world asset tokenization is happening on this network right now. This is infrastructure for the next generation of finance. And here's what people miss about network effects. As more institutions integrate the XRP ledger into their infrastructure, the flywheel effect kicks in. More usage leads to more awareness. More awareness leads to more adoption. More adoption leads to more usage. And XRP sits at the center as the native asset that makes the whole system work efficiently. It's the lubricant, the bridge currency, the neutral settlement layer that doesn't favor any particular jurisdiction or institution. That's valuable, really valuable. Let's talk about the Q1 2026 catalysts, because there are 5 major ones converging. First, RLUSD launches in Japan through SBI. That's live, real-world adoption in a massive market. Second, potential BlackRock XRP ETF filing. If BlackRock files, that's a game-changer for institutional legitimacy. Third, February regulatory clarity on pending ETF applications. More ETF approvals mean more institutional access. Fourth, March 2026 FOMC meeting. If the Fed signals rate cuts, that lowers the cost of infrastructure that's already been approved internally by banks. Fifth, deepening XRP ETF options markets. Options provide hedging tools that institutions need before deploying at scale. And here's why the convergence matters. When multiple catalysts land in a single quarter, decision-making accelerates. A bank deploying RLUSD can hedge through XRP ETF options. A fund gaining ETF access can rebalance efficiently. A rate cut lowers costs for infrastructure already approved. All of this happening at once compresses the timeline. Committees act faster, deployments scale quicker, and price follows adoption when the setup is this tight. Now let's talk about what separates XRP from other altcoins in this cycle. Most altcoins are narratives looking for utility. XRP is utility looking for the narrative to catch up, and that's a fundamental difference. When you have over 300 financial institutions using the technology, when you have $15 billion in real payment volume, when you have central banks deploying your CBDC solution, when you have stablecoins being used as collateral by BlackRock, you're not hoping for adoption. Adoption's already happening. The question is just how fast it scales. And here's where game theory comes in. If you're an institution and you believe XRP is going to play a significant role in the future of cross-border payments, what do? You accumulate as much as possible while it's still cheap and while supply is available. You don't wait for confirmation that everything's working. You don't wait for the price to double. You accumulate now. While retail is scared, while sentiment is terrible, while you can still buy meaningful size without moving the market. And then, when adoption accelerates, when RLUSD scales to billions, when ODL volume grows 30 to 50%, when more banks announce XRP usage, you're already positioned. That's the game institutions are playing right now. Let me talk about the differences between retail thinking and institutional thinking, because this is important. Retail looks at XRP and thinks, it's only $2, maybe I'll buy some and flip it for a quick profit. Institutions look at XRP and think, this is infrastructure for moving trillions of dollars across borders. This solves a real problem that costs banks billions in locked capital. This has regulatory clarity. This has a decade of development and testing. This has central bank partnerships. When institutions buy infrastructure, they don't sell it 2 weeks later because the price went up 10%. They integrate it. They build around it. They hold it. That's why ETF flows matter more than daily trading volume. That's why ODL growth matters more than speculation. Because real utility creates sustained demand. Now let's talk about competition, because I know what you're thinking. What about stablecoins? What about other blockchain networks? What about CBDCs that don't use XRP? And these are valid questions. Here's the reality. Stablecoins like USDC and USDT are great for holding value, but they're not optimized for bridging between different currencies and different financial systems. That's where XRP shines. It's the neutral layer, the Switzerland of crypto. No single jurisdiction controls it. No single institution controls it. It's decentralized enough to be neutral, but proven enough to be trusted. And when you combine XRP with RLUSD, you get the best of both worlds. Stability for settlement, liquidity for bridging. That's powerful. And as for other blockchain networks, sure, there are faster chains, there are cheaper chains. But name one that has 300 financial institutions integrated. Name one that has a central bank deploying a CBDC on it. Name one that has a decade of enterprise relationships and regulatory engagement. You can't, because XRP and the XRP ledger have something that no amount of marketing or VC funding can buy. Time, relationships, trust, regulatory clarity. That moat is wider than most people realize. Let me bring this all together, because there are a lot of moving pieces. XRP utility is finally catching up to the narrative. We have 40% of RippleNet institutions actively using XRP for ODL. We have $15 billion in actual payment volume. We have RLUSD being used as collateral by BlackRock. We have central banks deploying CBDCs on the XRP ledger. We have regulatory clarity from the SEC settlement. We have ETFs absorbing over $1 billion in institutional capital. We have exchange balances dropping 45% as supply gets locked up. We have Japan launching RLUSD in Q1. We have potential BlackRock ETF filings. We have a federal bank charter giving Ripple access to Fed payment systems. We have $2.7 billion deployed in strategic acquisitions to build full-stack infrastructure. When you step back and look at the full picture, you start to understand why this cycle is different. This isn't about hoping banks adopt the technology someday. They're already using it. This isn't about hoping for regulatory clarity. We have it. This isn't about hoping institutions buy. They're buying through ETFs and OTC desks right now. The infrastructure is built. The adoption is happening. The regulatory environment is favorable. All that's left is for the market to recognize what's already in place. Now, does that mean we moon tomorrow? No. Markets don't work like that. We could consolidate here for months. We could test lower levels if macro conditions deteriorate. We could see volatility as whales take profits and reposition. But the fundamental thesis is stronger than it's ever been. And if you've been patient, if you've been paying attention to utility rather than just price, you're starting to see why boring phases exist. Because when demand catches up to this level of infrastructure and adoption, the moves are violent. The moves are fast. And the people who understood the setup are the ones who profit. So where do we go from here? We watch the catalysts. RLUSD Japan launch, ETF approval decisions, March FOMC guidance, ODL volume growth, bank announcements, regulatory developments. Each one of these is a potential trigger. And when enough of them align, when the timing is right, that's when you see the breakout. But you have to be positioned before it happens. Because once it's obvious to everyone, once mainstream media is covering it, once retail FOMO kicks in, the easy money's already been made. Look, I'm not here to promise you 10x or 20x or any specific number. I don't know what the price will be. Nobody does. But what I can tell you is this. The utility story for XRP in 2026 is fundamentally different than any previous cycle. Real adoption, real institutions, real payment volume, real regulatory clarity, real infrastructure. That's not speculation. That's not hype. That's measurable, verifiable progress that you can track. And when utility catches up to valuation, when the market realizes what's being built here, that's when price discovery happens in a meaningful way. So stay focused. Keep watching the data. Keep managing your risk. Keep learning about ODL growth, RLUSD adoption, institutional partnerships. Keep your strategy tight. And most importantly, don't let the noise distract you from the signal. Because the signal is loud and clear. XRP utility is catching up. And this cycle is different, fundamentally, structurally different. And if you understand that, if you position accordingly, you're going to be in a very good place when this all plays out. Now let me talk about something that's not getting enough attention. The transaction fees on the XRP ledger have been surging consistently since 2024. And this isn't speculative trading driving it. This is actual network utilization, real transactions, real settlements, real economic activity. When you see fee revenue increasing while the price is relatively stable, that tells you something important. It tells you the network is being used for its intended purpose. And as usage grows, as more corridors go live, as more institutions deploy ODL at scale, those fees are going to reflect billions of dollars in value transfer. And here's another piece most people miss. The XRP ledger now has over 70 corridor pairs covering an estimated 80% of major global remittance corridors. That means if you're sending money from the US to Mexico, from Japan to the Philippines, from Singapore to India, there's probably an XRP-powered corridor for that. And as more corridors go live, as liquidity deepens in each one, the network effects compound. The Dubai Land Department is tokenizing real estate on the XRP ledger. This isn't just payments. This is real-world assets moving on-chain. And speaking of vision, Monica Long from Ripple just said she expects 50% of Fortune 500 companies to adopt crypto strategies in 2026. 50%. That's 250 of the world's largest companies exploring or implementing blockchain and digital asset solutions. And when those companies look at cross-border payments, when they look at treasury management, when they look at settlement infrastructure, XRP and RLUSD are going to be on that short list. Because the technology works. The regulatory clarity exists. The institutional partnerships are in place. All the pieces are there. Here's something else that's fascinating. The XRP ledger has an integrated decentralized exchange with over 5,400 different tokens issued and traded. With automated market makers and upcoming smart contract extensions, developers can build new financial products and applications. All of that creates more demand for XRP as the native asset that powers the network. And Ripple acquired Hidden Road, rebranded as Ripple Prime, providing institutional prime brokerage for large ODL transactions without slippage. Let me give you some perspective on the macro picture. SWIFT processes $150 trillion in cross-border payments annually. But SWIFT is slow. It's expensive. It requires pre-funded accounts. It has limited transparency. It takes days to settle. ODL solves all of those problems. 3 to 5 second settlement, fees in cents, no pre-funding required, full transparency, real time. Now, Standard Chartered's thesis is that ODL needs to capture 14% of SWIFT volume to justify an $8 price target. 14% of $150 trillion is $21 trillion. And with the infrastructure that's being built, with the regulatory clarity that exists, with the institutional partnerships in place, that's not as crazy as it sounds. And here's the thing about market share. It doesn't happen overnight. Banks don't wake up one day and switch their entire payment infrastructure. They test, they pilot, they scale gradually. But once they're in, once they've integrated the technology, once they've trained their teams, once they've updated their processes, switching costs become high. They're locked in. And that creates sticky, recurring demand. Not speculative demand that disappears when sentiment shifts. Real, structural demand based on cost savings and efficiency gains. Now let's address risk, because I don't want to sit here and pretend everything's guaranteed. There are legitimate risks. What if RLUSD faces regulatory delays? What if banks are slower to adopt than expected? What if competing solutions gain traction? What if macro conditions deteriorate and crypto winter returns? These are all possible. And that's why risk management matters. That's why having support levels identified matters. That's why having an exit strategy matters. Because even with the strongest fundamental thesis, markets can be irrational for extended periods. But here's what gives me confidence in the risk-reward. The downside appears relatively contained. We've got support around 180 to 190. We've got institutional ETF buying providing a floor. We've got whale accumulation at multi-month highs. So if things go wrong, the downside is probably 20 to 30% from here. But the upside? If ODL volume grows 30 to 50%, if RLUSD scales to multi-billion market cap, if Japan deployment is successful, if BlackRock files an ETF, if regulatory clarity continues improving, we could be looking at 2x, 3x, potentially more. That's asymmetric. And asymmetric risk-reward is what you want to find in any investment. Let me talk about velocity one more time, because this concept is important. XRP is designed for high velocity. It's designed to move quickly through the system. Buy it, use it, sell it, all in seconds. That's the use case. It's not designed to sit in wallets for years like Bitcoin. It's designed to flow, to be the bridge, the lubricant. And what that means is you don't need massive on-chain balances to support massive payment volume. You need deep liquidity at the entry and exit points. And that's exactly what's being built with prime brokers, with OTC desks, with institutional infrastructure. And here's why that matters for price discovery. When payment volume scales, you need more XRP cycling through the system more frequently. Even if each cycle only lasts a few seconds, the aggregate demand is significant. And if supply is constrained because tokens are locked in ETFs, because exchange balances are at 8-year lows, because institutions are holding for strategic reasons, then each cycle puts upward pressure on price. It's basic supply and demand. But it plays out differently than most people expect because the velocity component is unique to XRP. Now let's talk about what happens if this thesis plays out. If XRP becomes the standard for cross-border liquidity, if RLUSD becomes widely adopted as an institutional stablecoin, if central banks deploy CBDCs on the XRP ledger at scale, if Fortune 500 companies integrate Ripple solutions for treasury management, what does that world look like? It looks like trillions of dollars in value flowing through XRP rails daily. It looks like institutional infrastructure built around XRP as a neutral settlement layer. It looks like regulatory frameworks explicitly designed to accommodate this use case. It looks like a complete transformation of how money moves globally. And that transformation is already starting. We're not waiting for it to happen someday. Bhutan's live. Japan's deploying in Q1. RLUSD is being used as collateral by BlackRock. ODL's processing 15 billion in annual volume and growing. 300 institutions are integrated. The federal bank charter's approved. The SEC settlement's done. The ETFs are live. The infrastructure's operational. This isn't future tense. This is present tense. And the market's still pricing XRP like it's speculative, like it's hoping for adoption someday, while adoption's literally happening right now. So when I say this cycle is different, I mean it. We've never had this level of institutional infrastructure. We've never had this level of regulatory clarity. We've never had this level of real-world payment volume. We've never had central banks deploying on the network. We've never had ETFs absorbing this much supply this quickly. We've never had the catalysts this compressed into a single quarter. All of these things are new. All of these things are different. And all of these things suggest that the utility narrative is finally catching up to reality. All right, that's what I got for you today. XRP utility is finally real. The infrastructure's in place, the adoption's happening, the institutions are buying, and this cycle is different from anything we've seen before. Now it's up to you to decide what you're going to do with that information. If you want to learn how to actually trade institutional adoption cycles, how to read the data that matters, how to position before the catalysts hit, check out our crypto course, links in the description. And let's see what happens when utility meets valuation in 2026, because I got a feeling it's going to be one hell of a year. Stay liquid, stay ready.